Well, good evening, all. Ira Epstein, and here we are with your financial market wrap-up, and this wrap-up is for Tariff Day. Yeah, it is Wednesday. It's the 26th of March, 2025, just getting out about 6:17 p.m. Central Time. So 2 hours or so ago, President Trump came out from the White House and announced a 25% tariff on all automobiles, I want to use the word manufactured-assembled in the United States. In other words, it's got to go down a production line to finish up in the United States. That's my understanding of it. He didn't put tariffs on parts. He made it very clear he wants that car assembled in the United States off a production line in the United States to roll off that production line in the United States. That's not what we have with many cars that come from Canada and Mexico. You know that. That certainly isn't how you're getting your Porsches, your Ferraris. I can go on and on. Not that we have those, but you understand what I'm saying. Even Japan, which has big manufacturing facilities in the United States, about 40% of what they sell here is still made in Japan. Those get a 25% tax on them. So this is the first round. He also used the word permanent. So this isn't negotiable. What he's saying is you build your plant to assemble everything here, get your parts where you got to get them. He's liable to say the steel's got to be from America. I don't know the rest that he's going to do, but it's coming. So this is your first wave. He also went on to mention that pharmaceuticals are going to see tariffs, lumber's going to see the tariffs, food items are going to see the tariffs. The reciprocal part is very real, but he intends on surprising people with how little the U.S. will do in comparison to what they've done to the U.S. That's the positive note. Now, I don't mean that facetiously. That's the positive note. I think he realizes you can't do away with tariffs. You can make the game more competitive, but you just can't do away with them in the real world. And that's what we've come to. The initial reaction from the stock market, I promise you, is this. Okay, well, what is this all going to mean? What do I do right now? And that's why you're not in a crash. You came down, but this is a normal break in the market. The gold market is also. What do I do? Is that inflationary? What do I do with it? That's what's going on there. Other parts of the metal are breaking down a little bit. Bonds and notes, probably a safe haven up until and through April 2nd when we find out what the rest of the tariffs are going to be. Energy's flat tonight, and that's how I'm looking at what is going on. So I think we found out a lot. I do think that now the trading opens up. There's been a lot of people, me included, that have intentionally kept customers away from this nonsense of trying to understand what it is. This is like going through a major FOMC meeting. And I realize you're smart enough, but I'm not, to think that a bullet train is coming down and I can sidestep it just in time and not get hurt. Unfortunately, I'd lose a leg or my body. I don't want to be that guy. I'd rather come in afterwards. When we look at the S&P, a little bit of a bounce, but a market that has seen a top form, came down hard, getting just a bounce in it. You can see that bounce is leaking a little bit tonight. Did we make up a third of the bounce? That's about all that we've done. This bounce made back a third of this whole break. That doesn't look bullish to me at this point in time. Where are we hanging in at? You look at that 18-day average and you tell me. And then take a look at where the Bollinger Bands are. They're racing down and they're telling you, hey, there's a lot of resistance now, 5,900 to 5,740. It's interesting that Barclays and other banks have now come out and starting to lower their year-end projections. And one of the numbers I saw from the banks was the 5,900 level. Interesting as can be. And I can see the 200-day average giving some traders the idea maybe that's where it's at. Now understand, we're in March. You guys still got to get to the end of the year. That average will move around quite a bit, but not dramatically so typically. We then take a look at the NASDAQ, and it too couldn't make it up there. And look at, it's got the same resistance. So we've seen a bounce that is, to me, uninspiring. I don't know how low the market wants to go, but I at least now know where the resistance points begin, and I'd call it 2078 right into the Bollinger Band of 2813. Support the 18-day average. Lots of resistance in the Dow between wherever the Bollinger Band is and the 200-day average. We don't have on this market the 200. We only have that because it hasn't traded 200 days yet. So it'll take a little while to get that up there. It's not my fault. It's how the exchange does it. When we look at the Russell, you had an attempt at a rally, you got overbought, and you're immediately back to the 18-day average, void of a trend. Higher high, lower low. So I feel that I earned my subscription fees. Overall, I didn't get people in very much trouble. We had some losers. March hasn't been a pretty month, but it hasn't been a killer either. It just hasn't been a good month to trade. And the reason, tariffs. Not the name Trump, tariffs. And now that we know what they are, where they're coming from, now the discounting of them can begin in. In the DAX, this isn't good news for German auto manufacturers. I promise you. If the cars they're making in the U.S., yes. But the cars they want to send here, absolutely not. That's 25% more. Their economy is a big auto economy. Lower highs, lower lows. To negate this downtrend, you've got to take out the highs of Tuesday. Barring that, wherever the Bollinger Band is, wouldn't surprise me that you want to come in there. When we take a look at notes and bonds, I've told you, I think they're stuck sideways. I said that to you yesterday, and I still see it right now. There's nothing here that I can see to all of a sudden force people to go, oh, I'm scared to death, let's just start buying bonds and notes. Or there's nothing so strong in the economy off of this to create yields to go higher. I think it's now the flat side of the market for a little bit. Will the dollar continue to get a bit out of that? My true answer is I don't know. The chart's not helping me. The chart broke the downtrend. It can easily reassert itself by getting back under the 18-day average, and it's overbought as can be. And the flip-flop's true of the euro. But the tariffs that are on hurt other countries more than the U.S. And so maybe the euro is making a story, maybe, that wherever the Bollinger Band is, it wants to go visit that again. In the British pound, same thing. Going to be the harm that you see here. Jaguars, Land Rovers, if they're not made in the United States, and to the best of my knowledge, well, I don't think Jaguars are even being made. The ones you get, I don't know what they do from Tata. But if they are, they're fine. If they're not, they got a problem. So got to consider what's going on through that. And I'm just talking the cars so far. There's going to be other products that are coming in. When you look at Bitcoin, well, as you know, I think it follows the NASDAQ to a degree. It's back in an uptrend. I think you're going to see the pros buying it at the 85.33 level, which stops right under that low and say, okay, I'll gamble on the micro. And the micro is the one that people, I think, are trading. Now, as we get up into the energies, they're all in overbought territory. For my money, I think the pros coming out here, and they're going to take a look. Now that the tariffs are going to hit, is that really demand-oriented for oil? I don't know. You're not going to keep discounting the threat of whoever buys Venezuelan oil with 25% tariffs. That's out there already. So are we high enough to see a bit of a pullback from all these numbers where you're this high? The answer is very realistically, probably. And you might sink down a little further in the nat gas, but you're already in oversold territory. I've explained over and over, this is the time of year where nat gas is that funny part. You need your heat one day and the air conditioning the next. You think I'm kidding? Chicago was 30 yesterday. It's going to be 70 on Friday. So you're getting it back and forth. What were they, 90 degrees in Dallas today? So this is what goes on, the back and forth weather, just like this. So as we play around with it, just remember my combo package. In the mornings at 6 a.m., I put out a video. I start recording it and put it out by around 6:30, 6:40 Central Time. Buy here, sell there, do this in the futures markets. Here's the chart reason why. Here's the chart, daily, weekly. And then I do at 9 o'clock the same thing in Spider's ETFs. It's a perfect time to join in because I have little to no positions by design on. That's just how the charts worked out. Now the action's going to start picking up. IraEpstein.com research. You can hit the icon at the top. If not, I'll catch up with you all come tomorrow morning. Take care.